Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at the technical charts and try to understand what happened in the market during the previous week and also plan for a better trading week that begins from tomorrow, March 3rd, 2025, Monday. Yes, let's get in the charts. Here we have the Nifty 50 weekly view, and right side you have the daily view. Clearly within the trend line channel, hit the bottom of that channel, it could break or it could find support here. The situation. Daily charts are also showing it's another trend line channel, a lot of space for the go down, another 2%. Here is Banknifty. It looks more or less the same as it was the previous 2 weeks, and that's an ascending wedge, but it has reached the bottom once again after a failed attempt to move up. That's ascending wedge, which could break down. Any breakdown from here could be big, could be really big, right? And daily of the Banknifty showing that it's breached the first parallel channel and then trying to climb back, and then that movement is also within another small trend line channel. It's also at the bottom of that, breach of that. So it's a very crucial level for the Banknifty and the Nifty. It was a crucial level of support last week, and this week again it's crucial in the medium term, right? Which is a major support level of a parallel channel in the case of weekly, and a ascending wedge in the case of Banknifty weekly. So medium term, it's very crucial level. Short term, it is showing that it has already breached and there's a lot of space more for the move down. Now look at this candlestick patterns of weekly on the Nifty and the Banknifty. Absolute gap down, pro gap, and kicker gap, whatever I call it. It's wide range bearish, big bearish candle. And Banknifty does still not breach the lower, the previous swing lows, but it's a bearish candle and was very volatile as well. Unlike Nifty, which had fallen just like a crackdown. Remember, we have the swing lows at 21,000, previous swing lows, major swing lows, 21,000 election lows, which is, it is heading towards that. While Banknifty is very far from the previous swing low itself before it goes to the election lows of 46,000. That's where probably it is heading to. The candlesticks are heavily bearish, and the daily candlesticks are showing that it was a camp down on a Monday and 3 days weak consolidation and then a breakdown finally. Big break on a Friday. Look at the candle on the bread. It's very wide from 20 to 400 above. It has fallen to 20 to 100. It's a big fall. And Banknifty also similar pattern. The beginning of the Monday was a fall down, and then some attempt to recover, some consolidation there, and then finally Friday it dipped down, but an attempt to recover happening in the Banknifty because of HTC Bank probably. So bearishness is absolutely evident from the candlesticks, is what you see. Bollinger Bands, expansion of the downside continues with the Banknifty. Bearishness far away from the median of the Bollinger Bands, and Banknifty after a long time of consolidation, it's expanding on the downside, which means bearishness is going to continue. So that's what we get. That's what, you know, so wide range bearish candlestick patterns, bearish on both the time frames, and basically Nifty and Banknifty came down, consolidated, and then cracked down on Friday while Banknifty tried to recover some of it. Banknifty comparatively can be said it has not reached the previous lows. That's all I think for the bulls. And Bollinger Bands, as I said, is showing expansion on the downside, which is bearish, obviously. That's on the daily. And looking at the momentum of the trend, you know, it is just that the Banknifty has not breached the RSI 40, the bear zones. Otherwise, momentum is falling. Momentum is bearish on all time frames. Sorry, except for the Banknifty, waiting for the breach of the RSI 40. And ADX is a trend indicator, which is already in bear zones, and the bearishness, the strength of the bearishness is rising. So absolute falling momentum in the bear zones, and the trend turning into bearishness with big strength. The only hope is that the previous swing lows not reaching Banknifty's momentum in the medium term has not slipped down into the bear zones yet. And this is surprising. The volatility of the fear and greed indicator, India weeks, instead of rising up when such big forces, it has cooled up. This is something, it's cooled up 4.4%. This is something that the bulls may be happy about. So this will be hoping for some kind of supports to be found at this level, and it's an attempt to come back. Don't know whether it will succeed or not, but India weeks is falling back to the level to achieve. The expectation was that it markets falls a big support rise. It didn't happen. So that's another contradiction in addition to the Banknifty not at breaching the previous swing lows. So these two things are in favor of the bulls. Only two things. Moving ahead, if you try to understand the open interest, it's long unwinding that happened on Friday, which is bearish in next north indices. And for the March 6 Nifty weekly options and the March 27 Banknifty weekly options, that's The PCR is showing bearishness. It's Banknifty, although it's 0.9, it is not climbed back above the 1, so it's bearish. So bearishness in the options and futures. So now open interest can also be studied, and you can find some levels, potential levels based on the put on the call writing, levels of support and resistance. I mean, for Nifty, the levels seems to be where the highest put writing is at 21,800 and the highest resistance is at 22,500. It's a range, 700 points. And second highest levels of support is at 21,500 and 2300 is where the second level of resistance is there. And 49,000 and 14,000 is where the highest resistance and supports are there. Right. And that's it. That's about it. So make a note of these levels, and another way of finding the support resistance levels is to understand what the charts are saying. So you can see the parallel channel Nifty, and the first resistance was the gap that formed from the gap down. That's at 22,500 levels, and if that is breached, you have another gap at 22,700 levels, and then you have the 20 expression moving average that comes at 22,900 and 30,000 declining numbers, and Fibonacci 23,154 resistance above that, and then 23,292 at 50 expression moving average. That's resistance on the upside on the Nifty, and the downside. The first previous swing lows will be at 21,825, then 21,777, and 21,910, and then 21,530. Likewise, they're all previous swing lows until it reaches 21,000 rounding number. That's supports and resistance. So basically, we are using the exponential moving averages, the Fibonacci levels, the gaps, previous swing lows, previous resistances, and right, that's how we will. And the exponential moving average lemma, right? And similarly, if we can see that it is resistance up above the gap that is formed at 48,627, and above that you have Fibonacci 61 and the 20 exponential moving average at 49,000 levels, 145, 49, 286 levels, and then above that it will be 49,000 big rounding number, where also a demo and previous resistance is coming in and so on. Anything above the 49,000, the next resistance will be at 50,000, and where the 200 exponential moving average and the 100 exponential moving average is coming close by that at 50,300 nearby levels. That's resistance on the upside downside. The previous swing lows at Fibonacci 78 and previous swing lows is coming at 47,870 levels, and if that is breached, then 47,000 rounding number is there. Before that, 48,000 rounding number is also there. This is support. 47,000, 48,000, 47,876 Fibonacci levels, and then if that is also breached, it can fall down to the 46,947 and 47,000 levels. That's the support resistance. So there is a clear market here. We can go through that. In fact, PSL is previous swing lows, R is rounding number, Dema is exponential moving average, Fib is Fibonacci 61, and gap is window gap downs. Right, so that's how the levels are identified with help of the charts, and correlate the levels that's formed from this open interest and the charts, and then come to a place where we can bet on the support resistance. So there are probabilities of resistance and supports. Moving on, let's try to understand what the different sectoral indices are showing. It's down, nothing but down. IT sector is the bellwether. The IT sector is the sector that's defensive. It's holding the market since a very long time whenever the market is crashing down. But this didn't happen. The IT sector has cracked down because of the crazy talk by the some US president in the last several weeks ever since it's come into power. So it's causing panic. IT sector is going up 8% down. 8% IT 1 week. Everything bearish with respect to the momentum on both time frames, on both one sector indices, and everything is down. There's not a single sector that's up. Metal is 4.6% down, auto is 4.7% down, the pharma is 2.8% down, FMCG is 2.7% down, reality is 5% down. Everything bearish, absolute bearish. You can short, but absolutely no long games now. Just have to wait for the markets to get. So there's no point in looking at the charts. Everything is absolutely down, and IT is at the bottom at a major support zone, so there could be some consolidation here, momentum as well as the price at the support zone. Metal also at a crucial consolidation support zone at the channel bottom, so that gives me some hope. It is climbed back in the side zone, same way. So metal and IT at support zones. Auto, a lot of space more to correct. It can go. It has already breached the momentum and the trend in the bear zones, and a lot of space more for that to correct. And pharma is at the support zone at the bottom of the channel. Don't know whether it will hold or not. Momentum is dipped into the bear zones. FMCG is also a support. It is corrected substantially and at the bottom of the channel, and that could be some consolidation that can come in, or the momentum has slipped in these bear zones. And reality is a lot of space more to correct. Already slipped to the bear zones in the momentum and the trend, and the price showing that it can fall down to the channel bottom. So we have the IT pharma, IT metal, and FMCG. And pharma probably at some support zones, and while photo and reality showing on space more to correct, although all of them are bear zones in the medium term and short term. Sector indices is what we're talking about. Let's move ahead and try to see the heavyweight stocks that contributed max to the indices. Hey, HDFC Bank, when I was crashing down, HDFC did close green with a wide range bullish candle 1782. There is a big gain, and moment was still sideways, but the fact is that bank did not fall just because of this. Lattice Industries is finding struggling to find support at the 12,200 levels, and there is some more space of another 100 points. Can take it's a buying opportunity probably. Just corrected substantially, and there is a bullish divergence also. It could make a reversal from here, but as of now, it's sideways hovering around that. And IGC Bank is also falling down in the sideways. The red candle is formed. IT's has cracked down. TCS is bleeding, and Infosys is also bleeding with white range bearish candles and slipped in the bear zones. Both of them. Kodak Bank as usual consolidating. ITC also struggling to find support at the bottom of the channel and is slipped in the bear zones in the medium term. So we have trouble with everything except the banks. As you see, HDFC Bank is holding, and these are all in deep trouble. So heavyweight stocks that contribute maximum to index, obviously the lines will be in trouble. This itself is fallen 400 points plus, so no point in looking there further. So one of market indices is the mid cap and the small cap. If you see, it is heavily cracked down, big corrections extending with a big rather wide range bearish candle, and momentum slipping deeper in the RSI zones, and then probably some consolidation happening here because there is channel that formation that's seen there. But yeah, broader market correction, very big correction is happening on both the indices. That's about the study of the indices, heavyweights, and the broader markets. And now let's move on and see what does the institution say. 11,000 plus crores of selling in the cash market has happened with FIs last week alone, and the total 25,463 times this, what it sold last week. So it's a big selling that has happened, and then domestic issues are struggling to equally buy. That's why the recent market has not fallen even more further. Right, so the net longs, if you see, it's moved down for the last week. So that's what you can see right here. Price has been selling since months together, except for a few days, and it's billions of dollars that's falling out. And domestic institutions, that's IP money. The confidence of the investors in the mutual fund industry is keeping the market. How long will we do that? Let's move on and try to understand the global markets, global commodities, currencies, and all that. The currencies has spiked up once again. US dollar has corrected once again after some correction. That had happened around 4% of pullback from the top had happened in the last 4 or 5 weeks, and now it's again spiked up. Momentum is sideways and rising up. US dollar strengthening is not that great for our country. Dollar on the other hand, due to the RBI intervention of something, 1% of good percentage of pullback had happened earlier, so that is taken away. Now 1% up move is what has happened last week. If you see the dollar, it's about 87.45. The rupee at the weakest levels. That's a tragedy for the Indian market. Crude oil has been retracing, no troubles there. It has been retracing, and another 0.5% down this week also. 50% pullback has happened from the top, and then it's heading towards the bottom of the channel. So everything looks fine with respect to oil. For an oil important country like ours, it's very crucial. It's important support. And gold, if you see, surprisingly, after making new all-time highs, it has given a pullback. A wide range bearish candle is what you see, but momentum is still bullish, not just falling. It's a 3% nearby down this week. So gold is falling because of some fundamental reasons. But gold is falling as a hedging instrument when the market is cracking down. It's not that great, but gold is pulling back after breaking out to all-time highs multiple times. Nearly 8% of rally is what we've seen for the last few lows. The US market, except for the Dow Jones, there's a mixed bag here. It's all down. It's all red. 3.5% is what Nasdaq is falling down. That's what it's reflecting in the 90 index. S&P 500 is 1% down. Just the Nasdaq is managing to hold on after a major correction that happened the previous week. So all what you can say, the momentum is falling into the sideways down, and it's probably in red if you look at them overall. So that's US market is having some trouble. Very close to the all-time highs, not that great. Two stock mix Polycab. Polycab is something related to the cable fire. Some fundamental news came in and has breached the major. Because of some other giant company that is coming in this industrial sector, there is some competition, and profit may come down. So you don't need to worry about it. You can clearly see the charts are just showing bearishness, and then bet on that. Have tight stop losses though. Big volumes, price breaching pattern, and momentum bearish, deep below RSI 40. trend turning bearish with respect to the trend indicator or ADX. And Zydos Life Sciences also is a head and shoulder breakdown, and good morning to RiskReward can be seen here as well. Big volumes of momentum breach are below RSI 40 and the trend breach into bear zones. So two stock picks, Polycab and Zydos Life Sciences, both on the short side. These are not recommendations, so just for educational purpose you can understand the charts, and then trading or not trading, or that's up to your risk appetite, your decision, absolutely your decision. I have nothing to do with that. FNO strategy for the next week, it's a bull call ratio spread. Basically, call ratio spread is where you're selling OTM call twice as much as you're buying OTM, means you're hedging it with OTM calls with half of what you're selling, right? And listen to the RiskReward, good as long as you don't keep it from the end, good probability of profit, and then very low requirement. So the market falls down further to any level, it doesn't matter, profit will be less, but the market try to consolidate and make money. That's right. So don't expect too much. That's only things. The premiums are very low, so that's only strategy that can work out, right? So here is the weekly Nifty options fully hedged. But it's not fully hedged. If the price moves above 20,000, just get out immediately. It's not fully hedged for that matter, right? The moment there is a bounce up, what happens? Exit. You need to adjust. So it's a ratio spread. This ratio spread is where the ratio of selling is twice that of what is buying. Right? One side is protected. Right? That's what. So that's FNO strategy injection for the next week. Again, it's not a recommendation. It's for planning purpose. Now let's try to wrap it up. Market cranked down further. It extended the correction to 16% nearly, and closed negative with momentum trend, everything going to the bears, and FIS selling heavily. So 16 to 21 to 16 to 12% is the Nifty Banknifty kind of corrections that has happened. But remember, that's after a rally of nearly 70% on both the dices. So still it may correct now. No, it's not that brutal correction yet. But stock index wise we're talking about. But stock wise, if you see, individual stocks have corrected substantially, 40, 50, 60% is too much to take. So that way, there may be some time correction that will be expected in the future. So if you try to bucket all the different factors in favor of the bulls and the bears, bulls are hardly anything. It's just the momentum in the Banknifty, and the bears swing lows are not breached. That's the only thing that's in rules. So the bears, a lot of things, everything is in favor of the bears. And FIS selling like anything, US market is red. Operators long unwinding with the futures high, and PCI is also bearish. Lower price action. Indices, all the sector indices hit, lost momentum to the bears. Heavyweight stocks bearish, broader market bearish. Everything below the 200 expansion average, and it's all because of probably the US tariffs and the trade war and uncertainty that may be what is anticipated by the markets. It's what is assumed fundamental reason for this correction. But regardless, correction is due, and it is happening. The correction is what is happening. So Indian selling in the FIS, and there's hardly anything that can be done when such kind of selling is happening. So another 2% of fall from here can be anticipated. As of now, the chart is selling. The view is moderate, bearish. And always remember the levels that is mentioned in the sub-resistance OI, and all this can change. When a blank swan kind of big levels happen, it's not all the levels. There are just probabilities. Probabilities where this could find support. Probabilities where it could find resistance. That's where we bet on. So always, as I say, hedge your portfolio, hedge your entire portfolio, hedge your positions. Always hedge and protect your capital. That's all you have. Protecting your capital is what trading is all about. Right? The emotions take us over, and we don't know that. So always hedge. These hedging strategies when the market is falling to buy good stocks. So check out the playlist for the option strategies, and you can use several option strategies to make money, rental income, or you can even buy when the market is falling. At the time, so reversal happens, you can make money. And so now that's all I have. So if you like the content, subscribe, like, put in your feedbacks, and share to others. And I'm also active on X, another channel, so you can subscribe to that. I'm active on X, and then I put in technical analysis daily. So if you like, you can check out that. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.